The first big idea was a digital commodity, the idea of an asset without an issuer. That was the Bitcoin dream, peer-to-peer cash. Something that you could own through possession of private keys, something you could transfer without asking anybody's permission, something that existed apart from a bank, from a corporation, from a government. That was Satoshi's dream. That idea of a digital commodity, an asset without an issuer, has spawned extraordinary enthusiasm and excitement. It is, in essence, the basis of the entire Bitcoin movement. But there are a lot of other nuances, a lot of other ideas that actually came to the forefront along the way over the past 15 years. One of them is not just the idea of a digital commodity, but what does it mean to have a digital scarcity? I can create an asset without an issuer. Silver and gold and timber and soybeans meet that description, but they're not scarcities. I can create an asset without an issuer that has an inflation rate of 5% a year ad infinitum. It would meet the requirement of a digital commodity, but it would not be a digital scarcity. One of the fortunate happenstances of history is that Satoshi chose a monetary policy that wasn't just calculated to be predictable, because you can predict 2% inflation forever. But he actually chose a monetary policy that asymptotically approached 21 million, which meant that it was absolutely scarce. So in so doing, with the creation of Bitcoin, we didn't just create the world's first globally accepted digital commodity. We created the world's first globally accepted digital scarcity. And it turns out that we are now realizing that the killer use case of digital scarcity is digital capital. That is, the preservation of economic energy over time, not just over space. If you have a digital commodity, you can transfer in a permissionless fashion, you can transfer money through space. But we can transfer dollars through space and pesos through space. That doesn't make it a good store of value for 1,000 years. So, and even gold, for example, which has got, let's just say, a 2% inflation, it makes it sort of appropriate for transferring economic value and energy over time, but 2% inflation means a half-life of 35 years. 0% inflation means a half-life of forever. The difference between immortality and living 70 years is 2% versus 0%. So the early crypto economy, it had this idea of a commodity and a scarcity. People thought about it. And then along the way, a lot of other ideas manifested themselves. I mean, one of the great compelling ideas is self-custody. And self-custody means and implies digital property. There's digital information, like Beethoven's Fifth Symphony. It's non-conservative. You can transfer it to anyone. You can copy it. Nobody owns Beethoven's Fifth Symphony. But when you actually create a piece of information that you can convey ownership of via private keys, you can own it, and therefore it goes from being just digital information to digital property. So the dream of digital property also motivated this industry for a long time, because with that came the idea of inalienable property rights, unfettered property rights, absolute property rights. And so the idea in the crypto industry was, what if you could own it? What if you could transfer it? What if no one could stop you? And then along the way, people struggle with this idea of medium of exchange, and one of the big things that came out of the crypto industry was stable coins. How do you tokenize currencies? And of course, we saw that start slow, and then it got a little bit stronger. But what you had was small experiments with stable coins, and some of them were good, and some were bad, and some were ugly, and some crashed to zero, like UST or the Terra Luna complex. But the idea was there. Now, Another interesting idea, and it's not a bad idea, the idea of being able to move currencies at the speed of light between billions and billions of smartphones, not a bad idea. It's pretty obvious on the surface why you might want that. The other ideas that came out of the crypto industry were tokenizing brands and tokenizing real-world assets, and they experiment with them, with crypto kitties and all sorts of NFTs. And what did they have? The industry had a lot of wonderful, interesting, exciting ideas. The idea of tokenizing a brand is every celebrity on earth or every small business on earth could raise capital and could change their business model. You could tokenize memberships, you could tokenize fan clubs, you could tokenize just about anything. What did the crypto economy not have? Okay, here's what it didn't have. It didn't have legitimacy. It didn't have corporations. It didn't have banks. It had no support from insurance companies. It didn't have adult supervision. It didn't have a lot of common sense. People did stuff in the industry that's just crazy. If you find one of the ambitious banks of the world today, they're just lightening up and they're beginning to offer 20% advance rates against IBIT that they have clear line of sight to. That's 20% leverage. You go to a crypto exchange, you can trade cross margin 20x. That's 2,000% leverage. 40x, 4,000% leverage. We had, if you actually found a bank that gave you 80% advance rates, they would consider to be cavalier and irresponsible today. But we're talking about a complete Wild West in crypto where people could give you 4,000% leverage. And if you daisy chain 3 of these assets together, you get 40x by 40x by 40x. And people are wondering, what could go wrong? People say to me, well, why won't the crypto winter happen again? And what caused it? Well, what caused it was daisy chaining 2,000% leverage across 3 different assets, and having irresponsible risk managers or non-existent risk managers. Trust me, it's not possible to do that with JP Morgan or Bank of America or Goldman Sachs or Morgan Stanley with any other conventional asset. So the industry, it didn't have the bankers, it didn't have capital. There's no money. When we bought $250 million worth of Bitcoin, I put it out on the wire. I didn't realize at that time we were the first public company to buy Bitcoin in any size. And I didn't realize that was the largest investment of actual capital in a crypto network in the history of the industry. What happened over the past 12 months that's so extraordinary? What's happened is we had a switch in administration in DC, and you went from 11 cabinet members ignorant and 1 ambivalent and skeptical to 12 cabinet members that are supportive, enthusiastic, a supportive president, a supportive set of financial regulators, head of the Treasury, a supportive CFTC, a supportive SEC, a supportive OCC, a supportive Federal Housing Authority, intelligence, right? Tulsi Gabbard or Kash Patel, the FBI supportive. It makes a big difference, right? Howard Lutnick at Commerce, supportive. Kelly Loeffler, supportive. And now I would mark the era of institutional adoption and the commercialization of the entire crypto industry, and perhaps the evolution of the early crypto industry into the emergent, legitimate digital assets economy. I would mark that inflection point to November 5th, 2024, the red sweep. That was the inflection point, and the market sensed something was going to happen then, but it wasn't quite clear what was going to happen. The second thing that happened was the copying of that business model, and you now see emergent digital asset treasury companies. There are about 10 Ethereum treasury companies, public companies holding Ethereum, the most well-known being Bitminer, Immersion, led by Tom Lee. Tom Lee has emerged as probably the most visible influential spokesperson in the entire Ethereum ecosystem in a matter of months, maybe a matter of weeks. What does that represent? Well, first of all, they have $10 billion of capital. Second of all, Tom Lee is part of the Wall Street establishment. He was never part of the crypto establishment. You saw Wall Street merges with the crypto economy, capital flows because it trusts Tom Lee. And then the next thing you know, you have Tom Lee having conversations with the early Ethereum entrepreneurs, with the Vitaliks of the world, or and the like. And what's interesting there is that entire movement becomes commercialized, institutionalized, legitimized, rationalized, becomes a bit older, a bit more credible. Now companies, celebrities, politicians, lobbyists, lawyers, institutions, adults, capital markets, capitalists, capital, governments, municipalities, they are all being integrated into this crypto economy, one way or the other. And there are things that we are going to lose, and there are things that we are going to gain. There'll be a little bit of liberty and chaos, right, and speed lost. Some of the global nature of the industry will be lost. But there's going to be an extraordinary amount of utility and power and wealth and empowerment that will be gained. And the economy is going to evolve in various degrees of localized spheres of influence and continental spheres of influence. What's the killer application for a Bitcoin treasury company? It's to issue digital credit, right? Instead of issuing credit on gold, which is how the world ran for 300 years, now we're going to issue credit on digital capital. Digital credit on digital capital. That's one branch of this industry. How big is it? Hundreds of trillions of dollars big. Very big. What does it compete with? Real estate, art, gold, private equity, public equity, bonds held as a store of value. All wealth, right? That is a branch, and that is going to grow. So people say, well, what's going on with Ethereum and Solana and the rest of these crypto assets? And there, what you see now, and you hear it in the words of Paul Atkins, he says, I look forward to a world where we tokenize securities on chain. Okay, what's happened is there's an emergent consensus that, in fact, the proper way to tokenize a security or a real-world asset is on a chain, a smart chain, and there are three that are well-known today. There's BNB, Binance Smart Chain. Binance has 270 million customers. There's Solana, and there's Ethereum. Now, there are other chains that are emerging, right? If you talk to the people at Solana, they'll say, we're faster and better than Ethereum. And if you talk to the people at BNB, they'll say, well, we do more than Solana does. And then there'll be all the crypto entrepreneurs, Sui, and they'll say, well, we're better than Solana. We're the next generation. So how are you going to tokenize a security? And by that I mean a share of Apple stock, or a share, or tokenize a currency like the US dollar, or the peso, or the euro. How are you going to tokenize a brand? And here I'm talking, Joe Rogan coin or Katy Perry token, We call them meme coins in the crypto era, Trump coin, meme coin, such and such coin, it has no functionality. Well, let me tell you why it had no functionality. It had no functionality because it had no legitimate corporate or celebrity backers behind it, because there was a hostile regulatory attack on the entire idea. There's nothing constructive. Now think about this for a second. What happens when you have legitimate companies, McDonald's, Coca-Cola, legitimate celebrities, Katy Perry, Joe Rogan, with legitimate products issuing a digital token? Well, at that point it becomes a digital product. A digital product, like I've tokenized my country club membership. I've tokenized my fan club membership. Well, what am I going to get? I just get Katy Perry token? No, I get front row seats to every Katy Perry token for every Katy Perry concert for life. Huh? Yeah, I get front row tickets for life. Okay, well, that sounds like an asset. Yeah, it's like a membership. You've tokenized a membership. Well, how many people want to tokenize a membership? Like everybody? Everybody. Like, right? The Bitcoin community has been very focused upon pure, perfect money, and that's fine. But there's 40 million small businesses in the United States, and their issue is, how do I raise money? I'm the dude that does the chess podcast, or I'm the up-and-coming, celebrity, or I'm a restaurant. There's a lot of tokenized or membership restaurant clubs. I sell you a membership to the restaurant. What do I get? Reservations. Good ones. Right? There's a lot. Tickets. Tokenize the ticket. There's a lot of, what are those? They're digital products and digital services. You can't, why are they crappy 10 years ago? Because no big company is going to tokenize anything good. How about season tickets to the Commanders games? I'm not going to tokenize them if I'm going to get sued by the SEC, right? If I'm a famous actor, Blackpink, or a famous singer, Blackpink, or pick your favorite, musician du jour. They're not going to do it when they're getting sued all the time without that clarity. What's happening right now is, as soon as the SEC says, but the consensus is, hey, these are not securities. That doesn't mean they're as good a commodity as Bitcoin. There are various degrees of decentralization. And I think that some of these look more like federations, or they look less decentralized, and some of them look like assets with issuers. But you can have an asset with an issuer. That doesn't make you a security. Just because you have a country club membership, and you can play golf, the fact that you make it transferable doesn't necessarily make you a security, right? So what we've got is this emergent idea that maybe we want to tokenize securities, bonds and stocks. Maybe we want to tokenize real-world assets, a bar of gold, a bar of silver. Maybe we want to tokenize brands, every celebrity in the world. Maybe we want to tokenize products and services and memberships and clubs. Maybe we want to introduce entirely new business models. You buy this token, and then you'll get this privilege in cyberspace or in the real world, et cetera. Now we're seeing the 21st century economy. And the way this looks like it's going to emerge is tokenized securities and currencies and brands and products are going to circulate on smart contract networks secured by proof of stake, networks secured by finance. Capital is going to circulate on a network like Bitcoin secured by proof of work, by physics. The killer application of the tokenized economy is going to be new products, new services, capital raising, innovation, efficiency, moving money at the speed of light, maybe moving anything at the speed of light, computer to computer. The killer app of digital capital is going to be credit. Then we discover convertible bonds, and that's the third billion-dollar idea. Then we discover digital equity via the ATM. That's the fourth billion-dollar idea. Then we struggle and think about it a bit, and by not just a billion, like the convertible bond was a $10 billion idea. And then this year, Strike, Strife, Stride, Stretch. That's four $1 billion ideas. The year's not even over, okay? And so, and by the way, it was 30 years, thousands of people, hundreds of thousands of person years circling the world over and over again, working 3,000 hours a year, couldn't find the second $1 billion idea. And then this year, you accept this idea, digital capital. You accept this idea, digital intelligence, AI. I sat on my little laptop, and in 4 hours, that's the fourth $1 billion idea. That's the fifth. 2 months go by. This is the fifth $1 billion idea. 2 months go by. This is the $6 billion idea. Go off to Europe, try to do something, run into some legal thing. Here's the $7 billion idea. And there's a point to the story. And the point is, the people that are changing the world, they're not doing it by working harder. They're not doing it with good intent. They're doing it with technology, right? And the extraordinary technologies of today, digital intelligence, use it or you'll be slow and stupid. Embrace it, you'll be smart and fast. Digital capital, use it or you'll be poor and weak. Otherwise, you'll be rich and powerful, right? And then start to ask the question, can I issue digital credit? Can I create digital products? Can I create digital services? Can I create digital currency? Right? Don't allow your mind to be consumed with hate or paranoia or skepticism. We saw what that gets you over the past 4 years. It's like, I said to someone today, it's almost like the administration said, robbers use cars, terrorists use electricity, let's outlaw cars and electricity. People die because they drink alcohol and drive cars. Let's just outlaw that. You can look at the negatives in any industry, or you can just say, fire, electricity, cars, airplanes, they're complicated. There's some bad actors that used them to commit a crime once upon a time, but the alternative is to shiver in the dark